All the data from quarter one is in as of 3 minutes ago, according to Greenwich Mean Time. Tonight on the show, we're going to be taking a look back at everything going on with quarter one, specifically Bitcoin, crypto price, and we're even going to be taking a look at the timeline for the Trump tariffs, what's going on with legislation, and whether or not Solana can hold up the meme coin ecosystem over there. All of that is what we're covering tonight on Walk the Block. I am your host, Zenith. Welcome, everybody, to the stream. It is glad to have you all here. I'm joined by our excellent cast and crew, as always. Up first, we got Mr. Agent J. How you doing, buddy?
Doing great, man. Great start to the week. Well, great depending on if you're looking to buy
Great
these
personal start to the week.
But we kind of expected it. Par for the course. It's like clockwork. We knew that the uncertainty over the tariffs were probably going to cause some kind of market dip. And we are slowly but surely getting that death cross. 50 simple moving average is about to cross underneath the 200 again, which we usually tend to dump into death cross as well. So there's a lot of market indicators that are on the chart, and there's also a lot of fundamental, sentimental things that are most likely contributing to this downwards price action. But if you have a long-term view, if you're trying to accumulate more crypto, any dip is a gift. And whether the bear market is upon us and the bull market is over doesn't really matter to you, because you're here for you have a 10, 20, 30 year time span anyway. So other than that, same old. Track, how about you, buddy?
Not much, man. We had a good stream this afternoon, or actually this morning. It was a really good conversation. Hope to carry that over. Just glad to have Dace and Zenith. So we're going to get into some good conversations. Always look forward to our Mondays. It's a good time.
Absolutely. Last but not least, Dace, how you doing, buddy?
I'm good, sir. I'm good. It's funny. Jay said it's a good week, and it's if you're tapped into our daily Telegram calls, right? We're hitting some good markers thanks to my brother Agent Jay over here. So join in on the Telegram calls if you can over at Agent Roundtable. I'm well, sir. Glad to be here.
Glad to have you. All right, gentlemen, let's get into this first one and start looking at what allegedly is pumping the markets downwards, but we'll see about that. So from Cointelegraph, we have March 2025 in charts, talking about the Trump trade wars with Bitcoin and DeFi hacks. Starting off, we have an interesting graphic that I want to show everyone at home. This is the timeline of the Trump presidency and all the different tariffs that have been happening. So Trump gets into office January 20th, February 1st. Signs the executive order tariff for 10% on China, 25% on Mexico and Canada, starting February 4th. On February 3rd, we have a pause for Mexico and Canada after border security talks, delaying it for 30 days. February 4th, tariffs hit China. The 10% duties go into effect, and they also retaliate with tariffs and a probe into Google. February 10th, we have a steel and aluminum hike. Trump plans to raise 2018 metal tariffs to 25% on all imports by March 12th. And then on February 13th, we have the reciprocal tariffs plan. Trump announces new tariff policy to match other countries' rates. India and Europe are specifically in the crosshairs on these ones. March 4th, those tariffs go live. It's 25% on Mexico and most Canadian goods, and then 10% on Canadian energy, and jacking China from 10 to 20% up there. And then all three of them promise retaliatory tariffs. March 5th, we have the auto industry exempted. We have 1 month delay on Canada-Mexico tariffs for U.S. automakers. On March 6th, we have wider exemptions, delays most Canada-Mexico tariffs on goods. And then on March 10th, we have China hitting back with new 15% tariffs on U.S. farm goods. That's when the markets take a notable slump, March 10th, remember that date. March 12th, we have metal tariffs rise, 25% tariff on all steel and aluminum imports. EU announces retaliatory tariffs. March 13th, we have the mine warning. Trump threatens a 200% tariff on the EU for wine, champagne, and spirits. Oh no, France better watch out. Champagne's getting hit. March 18th, we have the tariff tone starting to soften up. Treasury floats a flexible, negotiable tariff rate. And then on March 24th, we have a little bit of a market rebound. And that's when Bitcoin recovered. And I believe that's when they made our day 13 cycle high, about $88,000. As it stands right now, though, we are still looking down the barrel. And we have the April 2nd tariffs coming up. That is going to be an additional 25% steel and aluminum tariff on China, I believe. And then as it stands right now, that is the actual implementation of that 200% tariff on EU1 champagne and spirits. So as it stands right now, that is what is in effect. People are talking about lowering their tariffs to avoid getting hit by these U.S. tariffs. But that right there is this is a great little timeline of everything going on. It shows that there's been a lot of back and forth on it, a lot of ideas, a lot of waiting, and if you're trying to create a flexible plan, that's great. But if you're a business market that likes stability, that's less great.
Not so much. Yep.
I was
Yeah.
just looking at a couple of these categories real quick, and just the spirits or the European wines, champagnes, that would be United States imports about 21% of the EU's production. So that's 21% slapped across the board on it. So that's a pretty heavy, tariff that would be hit on that area. Just FYI.
Yeah, look, something we say a lot is that markets don't like indecision, right? This is a lot of toggling, a lot of on and off. Will they, won't they? And the prices reflect it. And so, it's a good week because we see this as an opportunity, right? To go back to our intro. You can see this as a decision and run the other way and say, hey, it depends on the type of investor you are and what your goals are. But yeah, I think that this is a great reason why, despite an otherwise bullish environment, right? We've covered lots of circumstances in previous shows that lead us towards our long-term bullish sentiment. This sort of is an explanation to cover the gap between why currently prices are in a dip, in my mind.
Yeah. Absolutely.
Indecision is the key word that I think you had there, because looking at this infographic, we have an initial 30-day pause. We have a exemption for Canadian and Mexican goods. We have an additional delay. And it looks like we're even talking about the negotiating stuff on March 18th. So within 2 months, that's 4 different alterations to the timeline, effectively. Yeah. It is, I've altered the deal. Pray I do not alter it further.
Yeah. And this is actually a really good infographic because you can plot every single point in time where specific tariffs were supposed to go live. And then the time at which Donald Trump says, look, we're either going to hold off on some, keep others. For example, Zenith brought up that the non-compliant goods for the USMCA agreement are going to be taxed still, but the compliant goods, they're holding off on the tariffs. Every single time you get the date we're supposed to be announced, and then the date where Donald Trump says we're going to hold them off, and then dates where he's like, we're going to impose reciprocal tariffs, are particular points in time in the market where you could actually plot just exactly how much volatility those points of indecision caused. Every single time they decided to push the ball further down the road is another cause for a market sell-off because it's more indecision, which is why over the entire quarter, I have maintained the short-term thesis of every single time we get a move to the upside, it will be assumed as a counter trend rally until proven otherwise, right? The onus of responsibility is on the bulls to prove to us that they are ready to move the market up and continue the bull market. Otherwise, all of the indecision surrounding the tariffs, obviously the economic weakness that Jerome Powell basically laid out, that we're going to revise the yearly GDP for 2025 expectations downwards. They're expecting a rise in the yearly core PCE, and I think in terms of the labor market, that seemed to be relatively stable. But other than that, you put all of those things together, and you've just got a perfect storm of variables to push the market further down and to delay the pump that everybody wants to see. So it's not surprising to me the price action that we're seeing on the charts, not just on Bitcoin, but you take a step back and look at the rest of the world markets. They're experiencing the same thing. It's not isolated here to crypto, guys.
Yeah, just to add to this, it's not like companies can just pivot production and imports to another country, like on a, just pick up the phone and say, hey, can you fulfill my orders real quick? It doesn't work that way. You've got manufacturing and shipping. So it'd be like trying to have an entire US fleet do a U-turn, basically. It's not as simple as people are thinking it out to be here. Now, I know you said China as they're importing China, and they're gonna put tariffs on the steel and aluminum things that are coming out of China. That counts only for like 1% of what US steel imports are. But so Emily, 40% of China, Canada, and Mexico make up about 40% of what U.S. steel imports right now. So that's more of a hit right there for the steel aluminum aspect of it all. But I mean, now if this was something that was going to be long term, and if companies knew how long this would actually going to last, I don't think it will, but let's say it lasts for years and years. companies would adjust to it. They would adjust and they would figure things out how to work around that. But it's these tariffs, and I'm curious to know how long are tariffs typically last. And keep in mind the underlying fundamentals here of why these obviously better trade agreements for these tariffs, but the other fundamentals are U.S. wants these countries to take on U.S. debt, and this is one way to basically push them to take it on. That's something that I don't hear a lot being talked about in a lot of the news, but that's one of the underlying fundamentals. Ray Dalio talked about that heavily on his interview, and I started looking at it, and some others I was following, and they're saying that's the underlying fundamentals is they have $32 trillion of U.S. debt that somebody has to consume, or I hate to say it, but that Ponzi can't keep going if nobody's buying the widgets.
Yeah, you're not wrong. I think you're pretty right there saying that like this is an initial shock. And once we get that long-term picture about what the tariffs are going to look like, that's where we can actually start to focus on what a stable regulatory and business environment is going to look like. And then even once that is established, theoretically, there is the positive case on top of that, which is that you could use these as leverage positions to encourage other nations to reduce their tariffs. So you could set that base level of the new normal, which is the new tariffs. And then if things do improve, it's only an up trajectory from there. But until that level set, I think we're going to see a lot more of what we've been seeing now, which is instability and just inconfidence in the market and just trying to figure out what's going on any given second. But I think the data is largely supported. If you go look at the VIX, the S&P 500 had a massive red candle on Friday, massive green candle this Monday, and then I think the VIX, the volatility index, all the way went up to 25, I want to say. It didn't get quite up to 30, which is like a very, very high reading, but this is notably higher than a lot of the other average readings that we usually see. So the data is showing that the overall markets are just unsure.
Yeah, I think unsure is definitely an understatement. I don't know why that is. So obviously there's a ton of variables that go into what is causing the drop in price. However, it's really tough for me to argue the tariff side of the equation because we know that just this past FOMC, the base case for 25, for 26, for 27 in terms of labor market, in terms of core PCE, in terms of CPI, has not really changed for the Federal Reserve. And Jerome Powell came out because there was a lot of questions regarding tariffs during the meeting. He said that their base case were that inflation caused by tariffs, although hard to parse out from regular inflation, are going to be transitory. I know everybody hated the word transitory, but if you go back and take a look at points in history where tariffs were imposed here in the United States, that inflation, at least in prior cases, was indeed transitory. And so is it just a reaction from the market because most people believe that maybe the middle of the bell curve is going to panic, not knowing the long-term perspective, and so people are just trying to position themselves in front of it? Could be, but if you as an investor, your primary worry is, I think tariffs are going to dump the market and break the cycle, and we're just going to go into an extended bear market, I don't think that's a very good argument because we just don't have the precedent to assume that.
I think it's harder for the companies now to figure. Right now, you're having a shock in the overall markets because, I mean, listen, everything's interconnected. Risk on is how crypto is in the risk on asset. Unfortunately, it is. That's how it is. So anything that's risk on or uncertainty is going to take the most blunt of the hit. That's what you've seen, obviously. So now the companies that are trying to figure out, okay, how do we navigate around this? Or economists are trying to figure out, okay, what kind of impact is this going to cause? So everyone's trying to figure out the impact, but the problem is, like you just showed on the outline, it's more data points or more information just keeps coming in. So they got to keep compounding. Okay, what is that going to do now? And you have this interconnecting global infrastructure of an economy to where it's a domino effect. So I'm going to tax tariffs on China. Well, that's going to now put a tax on Australia because the iron ore out of Australia pretty much feeds into the production in China. So it's a domino effect trickle. So nobody knows how big this is going to spread and cause impacts. So everyone's trying to figure out, okay, how do you properly value a company if all of a sudden now their input costs could go up 20% or it might go up 30 or 40% because we're not sure. How do you value it? It's really tough.
Yeah. Tracker, you tapped on something earlier, kind of briefly about that really sparked my imagination about Trump's posturing of U.S. debt, right? Whether it's sort of incentivizing, let's say, folks to take it on. That also is going to change the U.S.'s relative debt status in the world, right? If you make domino effect changes through a global economy prior to your refinancing of your rate, and as a result of your actions, compared to the rest of the countries, your country looks better than it did before your actions. You may have accomplished a goal. Something to think about.
Yeah, absolutely. And it's also why you have currency wars, because they're trying to make themselves look like the prettiest girl at the dance when they're all ugly. That's the problem.
Well said, sir.
Very, very interesting quote there. Alrighty, gentlemen, we'll take this time to transition into something else. But first, I do want to say hello to everybody out in the audience tonight. We see all you guys. Thank you so much for showing up. We do have Centurion 54X, good friend of ours. He says, "What's up, fellow crypto investors? Good to see you, my man." Another good friend of mine, actually, Iron Hands Investing, he says, "Let's freaking go, boys." Good to see you as well, buddy. And then I said we were going live, and to that, Centurion is giving me a little bit of flack on that one. But
Yeah,
humor
apparently
there.
Maddie is having another sacrifice. So let's see how
Well,
that turns out.
We'll do some research and see what we can come up with on that one. Outside of that, though, we got Edwin Rodriguez says, "What's up, D-Gens? Good to see you, sir." And finally, bit of a legend himself, BLX. How you doing, buddy? We see
BLX,
you. We see you creeping over there, for sure. Talking about a guy that this is Mr. International right here, Mr. Worldwide. He is the guy that travels. He's been all the different places. He actually understands what it's like to operate between all the different countries. So hopefully we're providing some good data to him, and I'm sure he probably has some great insights for us after the show on this. Alrighty. Up next, staying domestic though. From our March 2025 article looking at crypto legislation in the US. We actually had, well, according to these guys, we had crypto legislation enacted in 2 states, that is Utah and Kentucky. We actually had a third one that I don't know why it didn't make the list here, but that is Texas. The Texas Senate passed a bill creating a Bitcoin strategic reserve in an effort to move towards a digital future. That one happened on March 7th, I actually want to say. So that one is pretty recent, but as far as crypto, things are getting moving here in the United States. Utah is one that has actually looked to provide some actual good regulation around cryptocurrency, and then I am unfamiliar with Kentucky and what their legislation looks like, but there are a lot of other states that have actually been starting bills, going through their different houses and various processes, specifically looking at either regulation for banks inside their state, or they're also looking at using it as a strategic asset. Not just Bitcoin, but also some of the other various cryptos, but primarily most of the bills just focus on Bitcoin. Gentlemen, what do you think about this? Is this a good sign, or is this a sign towards the bad future of CBDCs?
No, I think this is exactly, well, this is what you asked for. You asked for massive worldwide adoption. You asked for adoption here in the West. Well, you're getting it. And sometimes you're going to get adoption by people who you might not necessarily like, including the federal government. However, in this case, it seems like each state is acting as its own sovereign entity. And so they're creating crypto regulation that's appropriate for their state and for what their constituents are voting for. It's not a blanket throw at your face from Uncle Sam and the federal government as a whole. And so that's going to be good because each individual entity is acting within its own right. And I think it's positive because we're not just getting individual, not necessarily just isolated to Bitcoin, but the majority of the states that are trying to create a reserve, it's going to be heavily focused on Bitcoin. But we know that there are stablecoin news. It was very heavy last week. I believe it was Wyoming is going to have the first U.S. backed. Let's see, what exactly did Wyoming do? It was. Let's see. It was, I believe they called it the WYST stablecoin. Here, yes, it was indeed Wyoming, and they plan to launch its first fiat-backed stablecoin, which is going to be the ticker WYST, WYST, by July 2025, making it the very first U.S. state to issue a government-backed crypto. And then further down along my timeline here, because I was very I was very abreast of the stablecoin news. We have both Custodia and Vantage Bank, both local banks within I forgot which states they exist in, but they're here at home. They've both issued their first ever bank issued stablecoin on Ethereum. And this one is special because they're not being backed by US dollar equivalents. They're actually being backed by US customer deposits within those individual banks. And so we're getting massive amounts of adoption, not just in the terms of the US strategic Bitcoin reserve, but legislation within individual states that adopt their own reserves. And then obviously the big use case, in my personal opinion, for crypto adoption is not going to be Bitcoin being used as a peer-to-peer measure of transaction, although it is going to be functioning as such. I think it's going to come in the form of stable coins, because that's going to be how you onboard a big majority of retailers onto using it on their platforms, right? You pay me in stable coin. They're not going to ask, pay me in Bitcoin, pay me in Ethereum. I would actually personally say that's not, I would not advise people to do that, because you want to hold on to your Bitcoin. You pay things in stable coin. So I think overall, all of this different legislation going on in the different states, whether it's strategic Bitcoin reserve, whether it's individual stable coin regulation, I think it's just good. It's part of that very good, overwhelmingly good narrative that I think people should focus on more, because that's what's going to move the industry as a whole forward. And all of this short-term price action to the downside is just noise. It's a way for you to be separated with your crypto.
Hey, Jay, good point there on that one. I know we outline that one here all the time, and we've always shown the institutions are accumulating while retail, meaning the individual person, is just dumping left and right, and they're buying it all up. Tells you something's going on. They know something. I'm going to follow the smart money who's accumulating it. Now, I think as far as the states accumulating and starting these different strategic reserves or whatever they're trying to do, it's going to be really cool, because you're going to see each state handle it differently. It's going to be an interesting test case to see who comes up with the best idea and what's going to be the most effective. So that's going to be something worth watching. See who can leverage it the best to come up with whatever problems they're trying to solve. But ultimately, they're all trying to solve the same problem we're trying to solve. How do you hedge against inflation? And let's just face it, most states and in cities, councils, they're not going to cut their budget. Very rarely going to see them cut it. They're always going to be more. That's why they always keep building and developing more. They need more and more. I don't agree with that, but essentially they're going to be looking for ways to protect against all that in their expansions. And as far as hedging against inflation,
here's the thing why I don't necessarily see this as bearish, Twinkie. Oh, Twinkie. I said Twinkie because I see Mr. Angry Twinkie in the chat. Tracker, both of your names start with a T. Is that we know, you mentioned the federal budget. We know that as a whole, the United States is down under. We're drowning in our own debt. However, we do know that some states have done a very good job at balancing their own state budget, where they're in the green. And so I think that's going to be reflective in terms of crypto as well. You're going to have some states who take on these, who put on this TradFi government regulatory approach to crypto, but they're going to do it in a way that's actually beneficial, not just for the state, but for the constituents as a whole, right? I think if you focus on the federal government, I think it's a reasonable thing to say that the federal government tends to mess things up. But when you look at individual states are pretty good at handling their own business at home. So I don't necessarily see that as bearish, to be quite honest.
Oh, no, I hope that I wouldn't give off that impression. I don't think it's bullish at all. I think it's going to be really interesting to see. I think it's going to be more bullish to see who can be more creative with the blockchain technology and potential and what they're going to do for cryptocurrencies to fix various problems, mainly their budgets. That's what I'm going to be more curious to watch. I'm sure a lot of people are going to be watching that too. So who's going to get the most creative is what it's, I mean, it's a major test case right now across many different states.
Between the state economics and also, like Jackie said, Jay, new banking institutions cropping up and utilizing these very new rules. I shared in one of our team meetings that I went to Chase Bank for an issue, and I asked the branch manager if they were aware of the rule change in the executive order allowing banks to record their crypto holdings as assets instead of liabilities, and she was not aware. And so I think you're going to either see large institutions adopt to the times or new ones crop up to be competitive. That's the beauty of the market, right? That's how it's supposedly that's the idea, is to encourage that free competition.
Yep. Just throw it out there. Texas has the lowest debt, then Florida, then Alaska. Just FYI.
Sounds isn't that interesting?
I'm not very surprised by that list, but fair enough. All right, gentlemen, I got a bit of a fun one here for us. The Solana ecosystem faces a 99% decline in revenue. A number of high-profile scandals, including one involving President of Argentina, Javier Milei, have begun to scare investors out of the meme coin space. With most issuances happening on the Solana network, the exodus of traders has seen a 99% decrease in revenues from their high of $15 million on January 19th to just $119,000 at the time of publishing. There you go. That's the drop off right there. March also saw a continued downtrend in decentralized exchange volume generated on-chain and active daily addresses. DEX volumes in March have steadily declined from 3.9 billion to 782 million. 60% of Solana's economy is highly exposed to the meme coin activity. We have Telegram bots, launchpads, wallets, trading apps, derivatives, coin trackers, and DEXs. The future of meme coins remains uncertain, but Synthetics founder Kane Warwick told CoinGraph magazine that the network is better off for them. Quote, one of the cool things about the meme coin speculation is it drove a huge investment in infrastructure on Solana. Solana as a chain is 100 times better than it was pre-meme coins. Well, imagine that. When the meme coins leave, your volume leaves. Are we shocked?
Z, you want me to kill this article right now, bro? I'm about to kill this article right now.
Go for it.
I'm about to kill this clickbaity article, bro. let me share my screen right now, bro.
All right.
About to kill this. Well, it's not exactly fake news, but it doesn't give you the entire picture. Okay, so one of my favorite websites of all time, DeFi Llama, because it measures all of the quantifiable things that we care when we're talking about which L1 is getting the lion's share of attention, right? So very simple here. We have a ranking of all of the total value locked in DeFi. This is both EVM chains and non-EVM chains combined. Surprise, surprise, Ethereum has the overwhelming lion's share of the value locked. However, take a look at who is number 2. Well, other chains collectively make up about another 12%. But if you were talking about singular chains, Solana is number 2 at about $6.7 billion in total value locked. However, this is just looking at TVL in terms across all DeFi L1s, right? Let's take a look at some of the other things that we care about. How about number of active addresses? Oh, look at who's number 1. Number 1, Solana at 3.16 million active addresses, followed by Tron, the Chinese chain. Not surprising there. How about let's look at total value lock, right? Just as a column, right? Again, showing Ethereum there at number 1, Solana at number 2. Let's go at how about stablecoin? Stablecoins, Ethereum number 1, Tron number 2, obviously proxy for Chinese money, and then Solana sitting at number 3 at $12.56 billion. How about 24-hour DEX volume? Oh, look, Ethereum at 1.7 billion, Solana following close second at $1.12 billion. How about 24-hour revenues generated? Oh my goodness. Tron at number 1, lots of stable coins in Tron, so not surprising there. Followed by Solana at number 2 at $884 million. Ethereum sitting at a very pitiful $400,000 in 24-hour fees generated. So did the total amount of activity on Solana die down because the meme coin craze died down? Yeah, absolutely. But when you consider all of the actual quantifiable metrics that we care about when we're talking about, well, which L1 is being used the most? Which L1 has the largest market share of attention? Seems like Solana ranks within the top 3 consecutively across all metrics now, doesn't it?
You know, it would almost seem that all the different L1s and all the different chains are having a bit of a downturn in the market, as Bitcoin's having a downturn in the market. So it's pretty easy to look at the stats and be like, oh wow, everything's terrible. But the reality on the reality on the ground is that Solana is still kind of top of the pile, so to speak.
Yeah.
Yeah, Solana it was getting crazy activity though when the memes were getting hot. It peaked right around December. Yeah, it was out of control. I mean, it was straight up just hardcore gambling that was going on. On a side note, did you guys the Argentinian president, that whole thing, you can't even write this up. So he was tied to the meme. The meme gets rugged. He more or less endorsed it, whether he was involved or not. Then he turns around within a day or two and he shows up with Musk giving him a customized chainsaw on stage and all. It's like
Yeah.
you try to tell people this stuff and they think you're just full of crap, man. Like the crypto world is nuts.
That's what happens when you get deregulation, man. Some things like president launching meme coins also happen.
Yep. It's
Yeah,
nuts,
sometimes reality is stranger than fiction. This was kind of one of them. Although, to be honest, the support that he gave for the thing was just kind of like a tweet saying, "Hey, this is a good project," and then
yeah, that's enough though. With that kind of clout,
it is
though,
enough. It is enough. You are correct.
Completely no room for somebody endorsing something like that, and then to come to say, I had nothing to do. I didn't. Yeah, you did. If you endorse something, you're putting your name out there. You said something about it. A lot of people followed you. I mean, you're the president of Argentina. Keeping in mind, crypto is pretty big in Argentina because of how bad inflation is there. So they're very accustomed to crypto. It's very common to get your paycheck and convert it over to something that's their non-fiat because it's literally losing value, throughout the day. So it's more highly, and I say that also for a lot of the South American countries because inflation is pretty bad down there. So for him doing that, he burned a lot of people. And so, yeah, it looked really bad. It's a really bad look.
Think about the customer base, right? Think about the presence on the chain. That explains the article, right? It explains the drastic change in the flow of things. When you say crypto, you've got people buying ETF of Bitcoin, right? Which is not programmable money. You've got people staking Ethereum long term, and then you've got people in here running these meme coins that are incredibly short. I mean, like incredibly short term. And so it would make sense that a lot of these chains are going to fluctuate in this way. And it's helpful to watch which ones are trending and maybe even assigning, what market share they provide, in terms of their value prop to the customer.
Yeah.
When you say crypto, you're talking about a lot of different flavors of investing and manipulation of digital money.
Yeah. And here's the thing. I'm not saying that as a Solana maxi. I just really dislike it when people take things out of context and they don't show you all like the stuff that's actually quantifiable. Right. And that's what really upsets me, which is why I had to kind of dunk on this particular article, because no matter how you feel about Solana, they have market share of attention and they have market share of the money. So there's a reason why they're always in the news. There's always a reason why people are talking about them. There's also a reason why a lot of people are migrating to develop on Solana, right? Like people don't, there's a lot of quality of life improvements as a developer that you get on Solana that you don't get on Ethereum, or you get better. You get a better quality of life improvement when you're developing on Solana. Certainly a lot easier to build on than it is in Cardano. And yes, the Cardano manlets are going to be like, well, you're just not smart enough to build on this on this chain. But at the end of the day, it's like if you get the lion's share of developers, you're getting the lion's share of the talent. And you're more than likely to develop an app or something that could really blow your chain up. Like that's what matters at the end of the day. So remove your feelings from Solana and actually try to look at it objectively. But at the end of the day, for a lot of people, it's not really going to matter. You could show them all this quantifiable stuff, but they're like, "Well, Jay, the volume can be fake. Well, Jay, the number of addresses can be faked, etc., etc." So
there's always caveats.
But we had a really good conversation today with me and Jay on the stream. The same one that Dace was bringing up, that we do a lot of good streams every day with a lot of good information. But there was a really good conversation we had in there, and that was not, if you think about it, United States is going to start pumping money into crypto. They're going to start supporting and backing certain crypto chains, and just like the the large tech companies did, right? When they started booming. So we already been looking at it. And I mean, Jay went down a list. We were looking at Bitcoin, Ethereum, XRP, Solana. Those were kind of the main ones that we could see be dubbed or be knighted by the United States because they right now have the largest traction. They've been around for a little while. They are definitely been supported by the U.S. They've been gotten nothing but love since clarity has come out for the new administration. So if you want to look at it, a simple way to take this approach is if you're looking at your long-term horizon, having a portfolio of the ones that have the most interest with the government, that's probably not a bad strategy. And then having another trading account that strictly is for whatever, speculative investment or speculative trade / investment you're looking to do. Because don't get them confused. You have long-term investments, which you shouldn't be doing a lot of trading with. And then you have other trades where you're trying to, pick and snipe things when you're looking for them. But like, it's kind of like this, like your 401k and all. Should you be out there trading in your 401k? Probably not the best advice. I mean, you can do what you want, but that's more for long term. And we know the adoption's coming. This is no different than the Googles, the Amazons, the Facebooks, the technology companies that were at the forefront, whether you liked them or hated them, right? The government supported them. I don't care what they say. They got subsidies, they got backing, and they became mega juggernauts, changing the entire landscape. You could very much see the same thing happening again here with the new blockchain technologies that these various crypto chains that are bringing. Whether you hate them or like them, if they've got the attention, and when all this money starts coming in with the FDIC, we talked about today, money's flowing into the banks. Banks are told, hey, you need to be buying these ones, because we're not gonna, you're not gonna get those tax deductibles, that we're going to help you with or whatever. Those incentives are going to trickle down, and those are the ones that are going to probably pump the most. Whether they're the best or not, that's almost irrelevant at this point, unfortunately.
Yep.
Excellent, gentlemen. We do have some comments from the folks out there.
Dude, there's a lot of these comments by Iron Hands and BLX. They actually tie into the conversation really well.
For sure.
Yes, there you go. Yep.
We got a great chat here. Twinkie saying Solana is also one of the top 3 L1s for net inflows on the 1 month, year to date, and a bunch of other time intervals. So it's not just about where you draw the start and end point. It wins along a long time span.
I'll back that one up by just saying something to Zenas. I would say the next spot ETF, I'll be surprised if it's not XRP or Solana, and I'd lean more towards Solana if it is.
I want to say that Solana has a few ETF submissions already in the works. Nothing is confirmed yet, but they've had multiple ETF submissions up to this date.
Yeah,
correct. But I think they've got the best shot.
I would agree. I think it's it's exactly what you said. It's either them or XRP. I know, boy, they submitted a Doge ETF recently. It's like, okay, sure. I guess it's technically like a top 10 crypto, is crazy to say. But as far as legitimate projects goes, Solana and XRP are, especially if you're submitting them to the SEC, those two are the ones that I think are the most likely to get through, because those two are also projects that I think are being vetted by the SEC to see if they would actually fit that the proposed no capital gains on American crypto. So I think they have the special attention of the SEC to see if they can actually get those approved and into the New York Stock Exchange. So I agree with you. All right, up next we got BLX. He's saying the Argentinian people mostly use USDT on Binance to get dollars. They're not really out there using private wallets, using DEXs, or developing protocols. Yeah. Interesting stuff.
This is a very good comment by BLX, because I think we've discussed this multiple times. This is just not isolated to the Argentinian people. Most TradFi and most of the people that the TradFi people are bringing into crypto, their high-level clients, they bob and weave and move through traditional financial rails, centralized rails, which means they're not using DeFi, DEXs, like hot wallets, just like BLX stated for the people of Argentina. And I think by the very nature, you're not moving on to Ethereum and you're not using Ethereum, you're not using DeFi, which means you're not going to burn Ethereum, which is the point of the merge, right? To make Ethereum deflationary. And you're not going to get that kind of price appreciation, like that upwards pressure on the price of Ethereum, when you get a decreasing supply through the burn because of the high amount of usage, and then increasing demand as well. Now, when you transition, right, when the focus transitions from Bitcoin onto Ethereum, and then they're focusing on more DeFi and becoming DeFi native, that's when you're going to get the pump on Ethereum. And then Iron Hands has a few comments on Sonic. Can we bring those? Yes, that one,
Absolutely.
definitely a lot of good projects. But yes, this one in particular about the attracting
90% fee share could literally
Yeah.
lure a lot of devs.
Yeah. I think like Sonic is great because it's pretty to look at. It's easy to navigate. It's very user friendly. I learned a lot of I learned how to move in DeFi by playing in Phantom, right? Playing in Phantom, playing in those pools in there, and Sonic is no exception. I think if you're going to attract people to play in DeFi, I think Sonic is going to be a front runner in that regard. Right? Just by the UX, the ease of use, the quality of life improvements, all of the things that Sonic has and has improved on from their transition over from Phantom to Sonic, they've kept and they've improved on. I think Sonic is going to play a very key role in bringing not just retail, but in bringing some of these more traditional institutions an avenue, a gateway into DeFi, right? It's not just going to be Ethereum, right? I think, again, the ease of use, right? The ease of use, the fact that it's nice to look at. I think you're putting a lot more feathers in the cap for Sonic as a gateway to DeFi. I personally more so than Ethereum. I think.
I would agree.
we've
I'm
always
right
known
there
that.
with you. Go for it.
And Phantom / now Sonic has basically always had the best devs. They had the best creative, easy to use technology. I mean, some of their interfaces weren't the cleanest, but the functionality was there. And I'm thinking of, a lot of other, DeFi. But as far as actual working with the products, yes, I would 100% agree. We've always loved Phantom now / Sonic as the protocol for DeFi as far as the way it should be done right. And that's I would definitely agree with that. And incentives, absolutely, tons of incentives across the Phantom network. Now, obviously, we're talking Sonic, but I'll still always call it Phantom. I think, unfortunately.
It's hard to make the transition, eh?
It's kind of like the Twitter X thing.
Yeah, exactly.
Yeah,
Or Facebook
exactly.
Meta. Come on, man.
Yeah, it's going to be Facebook forever.
Yeah.
Ooh, we got this one. Phantom is the oldest EVM chain aside from mainnet. That's right. One of the common jokes, or I guess I think it's more of a conspiracy theory, but the joke is that Phantom is the beta test chain for all Ethereum upgrades in the future. And I mean, I'm just saying the track record shows it kind of is.
I was literally about to say, it's very interesting, like what chains Vitalik is interested in sort of being over, and then sort of he's not sweating them, and what chains, when they put out new stuff, he kind of seems to put stuff out right after. And Sonic and Phantom is definitely an interesting precursor to Ethereum upgrades in the past, and hopefully here very soon as well.
Definitely. I think Sonic has an opportunity to separate itself from Ethereum, though, because when we had the Sonic upgrade come out, what they originally were talking about is there's actually two different upgrades. They're very tied together, but they're slightly different. The first one is the base upgrade. I believe that was their Sonic 3 upgrade. It's applicable to all EVMs, so Ethereum virtual machines. And then they had the Sonic 5 upgrade, which was them actually upgrading Phantom to Sonic. Because they have different infrastructure, they can upgrade further to push it even faster and harder than the EVM does. So that's what I think is really going to be a bit of a separating point for them, which is they've actually expanded their technology beyond the level of what Ethereum is even capable of using from them. So for me personally, I know it's the meme of I'm in it for the tech, but I've been in it for the tech for a hot minute now, because Phantom, it stores data more efficiently. I think it's like Phantom stores all of its on-chain data in 1/8 the size of the Ethereum blockchain, meaning that because it has a smaller package, it's able to be accessed faster, sent faster, verified faster, so faster throughput, lower fees, and just more transactions. All this stuff. That's what I'm looking at.
I hear you, man. And look, this is going to sound more harsh than I mean it to, but Sega CD also checked all those boxes, and like Nintendo had the power of the face, right? It had the power of the mainstream appeal. We'll see what happens.
Dreamcast too, man.
Look, Dreamcast is one of the best creative systems ever, but we know who won the fight.
Mm-hmm.
So look, it's a wild example, of course, a bit of a nerdy example. But if you know anything about the history of video game console generations, the fastest and best has not always won. Quite the opposite, and it's an interesting thing to look at when you're thinking about technology and how it iterates in the world and how it becomes popular. What in what format you've got VCR, and Betamax, and then you've got Blu-ray and HD DVD. It goes on and on and on forever.
It's a good comparison, Dace. It's a very good proxy, because you could argue that Sega had always some of the better tech, but they just couldn't grab the market share of attention, whether it's because they didn't have the games. I mean, look what happened when the third generation consoles came out, right? PS3, Xbox 360, and then I think it was the Nintendo. Was it the Wii? It was the Wii.
Was that GameCube or Wii?
It was the Wii. GameCube was with the PS2 and the Xbox, the original Xbox. Look what happened when those generation of consoles came out. The Wii was the front runner, and then the Xbox 360 was a close second. Why? Because even though arguably Sony had the best tech in the PlayStation 3, they didn't have the games. Right? They didn't have the games. And then the Wii obviously capitalized on, look, we make video games fun, not just for, the young kids, but we have all of these different things that you could play with the family, right? Wii Sports, the most basic stuff that came with the original Nintendo Wii package got the family involved. And so they got the largest market share of attention, and they won arguably by like head and shoulders above both Microsoft and Sony during that generation of consoles. Same thing here in crypto, right? You could argue that Cardano has better tech than everybody else. Who cares? Who cares? Who's using it? Nobody. Sorry.
Man, I wasn't really going to date myself. I was going to tell you about, the battle between ColecoVision and Atari. And how Atari took that one, man. And then Nintendo came in with the better marketing, and of course it was family friendly. But then there was the second wave of systems that came out. There was a pretty slick console, but it was short-lived. It was TurboGrafx 16. I don't know if everybody's ever heard of that one. That was pretty slick how they did it. But they didn't have that one. Didn't come, But in Sega Genesis at the time, they had the best sports games. That's what kept Sega Genesis around and kept them going. But yeah, it was pretty much them and Nintendo for the most part.
I remember Resident Evil Code Veronica on Sega Genesis. It was so dope, man. It was and it was an exclusive first too, before the Genesis died out, and then and then GameCube got the exclusive. I think GameCube was the first to release Resident Evil 4. Arguably one of the best Resident Evil games of all time, definitely within that generation. So yeah, man, it's just unfortunate that Sega couldn't hack it. Dace, did you have something, bro?
I'll really date myself here. Sorry, Dace, for a second. My first PC was the Commodore 64. That's what I had.
That's such a throwback. A Commodore 64. Oh my
But think about it, man. It was perfect at the time. It's just a keyboard. You plug it into a television. You're up and running, man.
Did it come with an emergency backup hamster to keep it running? First one went down.
No, that was part of the expansion package.
I see. Yeah.
Hamster not
Gotta pay
included.
extra. Yeah, look, whether it's Ford and Ferrari, Coke and Pepsi, you know what I mean? Any fields where you've got developing technology and you're selling stuff, it can be a slippery thing. The best doesn't always win. It's a funky game, that's for sure.
Technically, the marketing doesn't always win.
Well, like Blu-ray won because the porn industry took the adoption on it, right? That was why they won. I mean, that's why it won.
It's the same reason why the internet works how it works. Tracker's correct.
There you are. There you are. Know your audience.
Right.
So what I'm gathering is that the first blockchain to incorporate OnlyFans is going to be the winner.
Right. Well, what we were saying before about
far from it.
We're all screwed. We're all so screwed.
Well, think about it. If you're leveraging NFTs for VIP access for various clubs and area access, possibly.
Oh, I'm sure it's coming. Tracker just gave us the juice on some new business plan here live on Walk the Block.
I'm not gonna lie, that might be some of the most alpha we've dropped on here, and it feels kind of dirty.
So look, I would say, this goes back to our first topic about Solana, is know your audience, right? Right now, Ethereum, BTC, we're all watching Ethereum. We'll cover here in the TA for a minute. Ethereum has been bleeding against Bitcoin for who knows how long, a long time. I would argue that it's because their marketing is poor, because they don't know their audience and they haven't been able to identify and reach out to them. And so Ethereum still has the lion's share of all the money sitting on the chain for now. The window is still open for them to release an upgrade that reaches their people, that resonates with their audience, and continue to grow. But the eyes are on them. That's for sure.
That's very true for sure. Yes, excellent.
But they
All right,
need to
gentlemen,
cut
well-
off the L2 vampire. The L2s are draining them.
Absolutely.
Ethereum's got a lot of issues they could easily address, but they're just not addressing it. That's what's pissing everybody off. Yeah.
Have we talked on this show, or was it a different show, talking about how it feels like the current issue with the Ethereum Foundation is that it's a lot of people that really made it big in the last cycles, and now they just don't have that fire under their butts to get them going, get them innovating, get problems fixed. They're just like, I'm rich for life. What do I need to do more work for?
I think the talents are being pulled in too many directions. There is significant disagreement within the Ethereum Foundation about what direction the chain needs to take, about the roadmap. They need to either thin out leadership, right, so they can actually come to a consensus and move towards it, and they don't spend months, years deliberating about what needs to be done.
That's the speed of government right there,
Yeah.
which is meetings and probes and councils and crap like that. It's like, no, crypto needs to move faster than that.
Yeah,
You gotta.
You can't move at the speed of a turtle, unfortunately, right? Money loves speed. Tech loves speed. Okay? Break things, fix, break things. That's how you improve. Okay, Solana
break
doesn't. Solana asks for apology later. It doesn't ask for permission, right?
I was about
Like,
to say that,
we
man.
break
That's how
things-
Solana grew. They marketed their speed. They didn't market, become a validator. They didn't market any of that junk. They marketed you come in and out as quick as you possibly could ever want to.
Ethereum needs to get better. They need to segregate and run it like a company. You want to have a front marketing person, people who are your PR folks that can handle all that stuff, and put your smart people to work doing what they need to do. Engineers are not the best people to put in front of a group of people asking a bunch of questions. You're going to lose them in the
that
sauce.
hurts, Tracker.
It's
That
bad.
hurts. I'm the engineer leading the show tonight.
Some dude named
No.
Rick,
I'm talking about developer engineers. The people that are doing it are not the best people to put in front of crowdspeople because they're going to get lost in the weeds. They're thinking at such low level and detailed oriented that you're going to lose your audience. They need to put people that are designed to lead those conversations. Most engineers or developers are introverts for the most part. Not saying all of them are, but a lot of them are. They aren't the people you want to be putting on stage in front of people. Not
You're
everybody is
correct.
Not everybody's a Richard Hart, that can kind of do a little bit of everything. It's not the case.
That's true. If you can get those
Ethereum marketing guy, honestly.
If you can get the tech people that are charismatic and are able to actually be good on the mic, that's fantastic. But I think that's a lot more rare. But Tracker, to your point, you're entirely correct. This is why businesses have specialized as much as they have. It allows people to focus on what they're good at, and that's I hate to say it as much. Hate to say it, but like this is where you get managers and where you get like project managers who can actually integrate these teams and get them to work together. That's why those people have accumulated the value that they have in the modern day. I know I love to give them flack because I am one. I call them professional liars because we lie about the budget and the schedule because it always gets pushed in the wrong direction. But that's one of those things. It's the rise of that role allows the specialized people to really work their own at their own pace, which is a very fast pace in some of these areas, and allows them to reconverge and then push forward. So I agree with you completely. If you can get more people to do their jobs and just let them just roam free in their area, that's where you're really going to make those big gains.
Yeah. I mean, look at Apple. Perfect example. Steve Jobs was a visionary, sometimes unrealistic and treated his people like shit, but he was a visionary and he pushed his folks. Wozniak was the engineer with all the talent on the back end that was making it all come together for the most part. I mean, that's how Apple was built. Wozniak was the one that was the engineer, smart guy. Steve Jobs was the visionary that they knew where he wanted to take it. It takes different people, man. You bring those different talents together. Now you have something special.
Yeah.
Oh, for sure.
The thing is, it's not just, so you guys are talking about the marketing. It's just not a marketing issue with Ethereum, right? You don't have a charismatic face for Vitalik is charismatic in his own right, but when you see the recent video of him on the floor meowing at a pet robot, right? That doesn't even look like a cat. I don't know why he's meowing at it. It's not a good look, right? It's not a good look for. It's not, or him dancing up on stage singing the.
Wait
Ethereum,
a minute.
It's not a good look.
Vitalik should not be the voice of Ethereum. I'm sorry.
Okay. All right.
You shouldn't be.
But the more important thing is you need direction within the Ethereum Foundation. All right. You can't spend months deliberating about what should be done, because if you wait for perfect before you act, you're going to get left behind. Right? Technology moves too fast today. Right? You can't wait for perfect. You got to act. You fix things along the way. Otherwise, you'll never get anything done and you will get left behind. You think the world's going to stop spinning because you need to get things done perfectly?
Analysis by paralysis, man.
Yeah, don't let perfect be the enemy of progress. Gotta get stuff going. I know Dace mentioned it earlier, but we love giving Solana flack for being the only blockchain that goes down on a quarterly basis. But at the same time, they're moving fast. They're breaking things. So got to tip the hat where it's due. By the way, we got a good comment from Twinkie. He says, I think that is a big part of the reason Andre has done so much for Sonic. He had multiple experiences, chain and app development, UX, and also being a DeFi user.
Yeah. Yeah, man. Great person to lead the team.
Absolutely.
You know?
All right,
and he's
gentlemen.
the one delegating. Right? He's the
sure.
one delegating tasks.
Definitely. All right. Well, we're almost at the top of the hour, and I don't want to leave the people with a misleading title and thumbnail, but we do got to hit the Q1 stuff eventually. So real quick, let's get it going. Not that one, this one. So maybe this will be another softball for Jay to smash out of the park, because it's also from Cointelegraph. But we have the worst quarter one for Bitcoin since 2018. We got 5 things to know in Bitcoin this week. So we are looking at switching over to CoinGlass. Here are your Bitcoin quarterly returns. We have a negative 12% as of 1 hour ago, because we had our monthly close. In our quarterly close, we can see that back in 2022, we had a negative 1.46, 2020, negative 10.8. And then 2018 was the last one that really was I think this is actually the biggest one. 2018, 49% down. Yep. So what is going on?
You know what makes this thing even worse? At least just from like a history speaking, this is a post-halving year. 2021 post-halving year, 103%. 2017 post-halving year, 12%. So to be in the red on a post-halving year, not exactly. Well, you could understand why people are getting bearish. However, we have spoken about this particular theory multiple times here, not just on Walk the Block, but over at DGen Roundtable, over in the Telegram, that I know everybody is set on the 4-year cycle theory, right? The 4-year cycle narrative, the 4-year cycle thesis. And like me and Z have said multiple times, we're not going to assume that something breaks until it actually does. However, if you're set in stone about following the 4-year cycles, you have 3 data points to pull from. 3. I know 15 years might be a very long time, but technically within the 15 years, you have 3 data points. 3 4-year cycles worth to pull from. It's not a lot. And so, like, just stepping back and looking at it objectively, can it be that the 4-year cycle, can it break? Yeah, absolutely. I think if there was a time where it could break, this would be the year where you could present a very good argument, because crypto has not experienced a bull market where you are in severe, tight monetary policy, which is unfriendly to risk assets in general. This is our first I know people bring up the 2017 example. That's fine, but it's not apples to apples. The severity of QT that we are in now is nowhere near close to what we experienced back in that cycle. Right? So it's not an apples to apples comparison. So can it be different this time? Yeah, absolutely. Which is why I think this is just noise. Even if it is that we are in an extended bear market, don't care, really. Don't care. I'm just going to buy more Bitcoin. Right? If Ethereum makes it back down to $800, don't care. Gonna buy more Ethereum.
Look down there at the average. Look at the strike. This Q1 of 25, negative 45, average plus 77. So, if you want to take another bet against next quarter's average being, what is that? An aggregate 100%, more than 100% deviated. I mean, yeah, you can if you want to. I personally will be betting the other way. That's just me.
I mean, Jay, I'll reiterate the other thing is this is also a time where now you have, I keep bringing it up, but TradFi is now welcome to the party. TradFi likes to muck shit up. They like to manipulate things. and I'm using the word, I'm trying to use the F-bomb because I really want to emphasize it. They really do that on purpose
They
to
do.
misdirect and misguide people. Then they put out all these FUD articles telling you it's all going to zero and they get people out of it. But we keep telling you guys that the big guys are the big institutions are accumulating. They keep accumulating while institution or the regular Joe on the street is dumping. That tells you something. Right. And regulation is getting more clarity. It feels like everything's bad because now if you just turn off the news and don't look at macro and you see the charts dumping, it's pretty bad. But if you just turn off the noise, if you're long-term horizon, exactly that. You want to be accumulating. When things run up, it'd be nice to take profits. Should people have taken some profits in Bitcoin? Yeah, 100% after it had the big massive run up. Some profits. Ethereum, we nearly never got that. Other Solana, if you didn't take profits in Solana after that run, I'm sorry, you got greedy. That's all there is to it. You got real greedy. Thing went from like $12, $14 to almost, was it 200? It's like I don't know how you didn't take profits there. I mean, you got to take something off the table. But Ethereum, we never got it, so it's gonna be interesting to see how it plays out.
I think Jay really hit it home though, which is that this is the post-halvening year, and at this point in the market, at this point in the cycle, we really should be on that more parabolic slope instead of taking effectively a 3-month hiatus just to move to the downside. And to be honest, there is a decent potential that we're going to get another month or two of downside potential based on everything going on with the current trends, with the moving averages, the momentum. And I mean, if you watched the show yesterday on DGen Roundtable, we talked about it, how people are actually looking at that 65,000 level. And to say that Bitcoin is having potentially a 40% correction over the course of like 3-4 months in what should be the hottest point in the bull market, or not the hottest point, but like the hottest point yet. That's a real deviation from the trend there.
Yep.
It is, but once again, TradFi likes to mess with everybody and likes to throw mixed reactions. But they're accumulating. Everybody else is dumping. I'm sorry. The 4-year narrative, and I get all that, but you don't think TradFi is sitting back with their technical analysis that are looking at this and deciding how they're going to decide how they're going to buy and make some moves here, and the big institutions are going to be buying it? You don't think they don't think the same theory out there about the 4-year cycles and all this stuff? Of course they are. And on top of that, if you want Bitcoin to be the king right now, then it's real simple. You strangle Ethereum, which basically holds back the entire crypto market. And we've already seen the short interest against Ethereum. We keep talking about this over and over again. So there was never shorting of Ethereum and Bitcoin up until spot ETFs came out. So we're starting to see the manipulation, and you're seeing it unfold in front of you. So you're going to get a lot of mixed signals here, and it's tough. It's really tough.
There's a reason. I'm pretty sure you guys have heard me say that if there's one thing I can take away from crypto, it is give these freaking institutions the ability to use leverage, right? They're shorting, they're longing, they're perpetuals, they're derivatives. Take it away. Spot only. Spot only.
Oh man, well, you can't take away the derivatives market. I mean, that's a $200 trillion market.
It'll never happen.
5x the actual money. Yeah, derivatives
It'll
market
never
is
happen.
where you want to talk about the ultimate gambling. That's the biggest gambling is derivatives market.
Well, let me connect the dots here, man. I mean, when crypto has reached a new level, right? And it's new levels, new devils. And so the devils that play up at the level that crypto has now walked into, we're small potatoes compared to some of the assets that they're moving in and out of. And so they see crypto and they say, oh, cool. I can strap on this amount of short leverage and dunk the price on it and accumulate it at the bottom. Great. Let's do that. I mean, because compared to whatever else, the other size assets that they're dealing with and in and out of, it could be a very easy play for somebody with a lot more capital with which to move their pieces around. And so it's most certainly growing pains is sort of my take on it for the reasons you guys described.
Most
That's a good
definitely.
point. 2.8 trillion. That's it. That's the market cap. 2.8 trillion. It's very easily manipulated. Sorry, Zian. Go ahead.
Oh, you're good. I guess another data point that I'd point out here is that the institutions are the largest players that we've seen in the space up to this date. And those people are continuing to purchase not small chunks, but large chunks, even on this 3-month downslope here. And before that, I think there's a possibility that maybe there was a bit of overstated optimism when Donald Trump got elected, because we saw the November pump. That's when we went from those like 60 to 70,000 level all the way up to 109. And now we're dropping back down to the low 80s. And I think the difference between those two time periods is the pure optimism of getting a new business-minded environment, and then the reality, which has been all the tariffs that we started off the show with. I don't think it's gone the exact way that traditional finance has thought it's going to go. I think they were probably hoping that Donald Trump and the administration would be a little less aggressive, but they came out of the gates swinging. And I personally think that that's a good thing, because we're seeing for the first time, like ever in government, people moving fast and breaking things. So from the pushing the ball forward mindset, I like that. From the traditional finance mindset of we like things to be stable, we like stable business environments, those people are not getting what they were hoping for in regards to that.
Mm-hmm. Absolutely. So it's everybody has to adapt, right? Everybody has to adapt. It's not just us. It's not just us having to adapt to these players coming in. It's them having to adapt to a new paradigm of money.
Absolutely. Alrighty, gentlemen. Any final thoughts on the matter? Is it over? Are we done? Should we just sell out, go home, wait till 2026?
Thank you for joining us in the last episode of Walk the Block.
Hopefully not.
I want to see the ultimate short squeeze in Ethereum. That's what I'd like to see.
Ooh. Okay.
There could be. If you think about it, there's a good chance you could liquidate a lot of people if there's enough aggression out there. You liquidate a lot of people because there's a lot of shorts on. But I'm in the camp with Jay on that one. I am. Basically, until we get more clarity, tariffs need to get the heck out of the way. It would be nice to know if interest rates are coming. It would be nice to get 3 instead of 2 this year. I would love to see them be a little more aggressive on the rates, on the cuts. If these tariffs keep bleeding harder, they may have to get aggressive and not just cut with a quarter. They might have to go like full half, just do a half, and then be a little more aggressive. I don't know. This could be a blessing in disguise. Here is what I mean. You need some pain to get the Fed to.
We lost the track.
Move a little bit.
No, he's getting rugged. Spitting too much.
Getting rugged. Hey, before we close out here, Z, Twinkie did ask a question about what are our projections for total market cap for this year.
Okay. Let's see. Do you have
I have my estimates on that.
Okay. If you want to do a screen share, we can.
Yeah. Let me go ahead. I'm gonna be very napkin math here, but it's pretty easy. So total crypto market cap as it stands is currently sitting at, what the heck? Did I stop my shoes? Are you guys seeing my screen or no? Give me a second.
I am seeing.
Let me reshare it. Let me reshare it. There we go.
Yeah, it's coming up.
Yeah. Let's try and zoom in here a little bit. There we go. Okay, so total crypto market cap right now is sitting at let's call it $2.8 trillion, right? Flat. And Bitcoin is currently sitting at $1.6 trillion of that total market cap, right? So a little bit over 50%. So if we were going to assume that Bitcoin, let's be generous here, and Bitcoin, we still got a 4-year cycle. We still got to run up into Q3, Q4 of this year. Let's assume graciously that Bitcoin still makes a double. So anywhere between $150,000, $160,000 Bitcoin. So that'll bring Bitcoin's total market cap at about 3.2 trillion. All right. So just Bitcoin alone going to a double, about 3.2 trillion. Now, the rest of the crypto space, so that's including stable coins and the rest of your altcoins, is, let's just say, a little bit like 40% or so, right? And so let's also give them the benefit of the doubt that the rest of the altcoin space, so we're sitting at 2.8, so that's about the rest of the altcoin space plus stable coins is sitting at about 1.2 trillion, right? 1.2 trillion. So let's be generous and say the rest of the altcoin space, including stable coins, also goes up a double, right? So 2.4 trillion. Right, so that's putting you in the realm of about $5.5 trillion in total market cap for Bitcoin, stablecoins, and the rest of the altcoin space, which is reasonable. Which is, I think, on a lot of people's radars. I know we were thinking higher end in some streams, like around $10 trillion plus. I think asking for more than 10 trillion is a bit of a stretch, because if I switch over here real quick, Zenith, to my, let me go ahead and share my charts. I know we're not going to have enough time to go into charts, but at least I want to give this one for Twinkie. So I'm going to go ahead and share my charts for total market cap.
But Jay, real quick, if people wanted to see your charts, didn't you do a stream earlier today covering those?
That is correct, sir.
Where can people find those?
You could find those in the Telegram channel. They are in our Telegram exclusive folders. And so, if you want to see a detailed TA for this morning and for the market, we did with a TA for both Bitcoin and Ethereum, then go and scan the QR code, join the Telegram channel, go to the Telegram exclusive folder, and then you will get the updates there. All right. And so, if we actually do just a quick Elliott wave analysis here for total market cap, right? So let's rough estimates, right? There's your 1, you get 2, 3, 4, and you're heading to 5, right? Just rough Elliott wave estimates. We can actually make a comparison between your wave 3 and your wave 5, and we can get some rough estimates for what the total market cap for crypto can bring us for this wave 5. Let me go ahead and toggle on wave 3 versus 5 in a contracting diagonal. There we go. And so you can see that a very common extension for the wave 5 is anywhere between the 0.5 and the 618 Fibonacci. $4.3 trillion, $6.5 trillion is the very common extension when you're talking about a contracting leading diagonal in Elliott wave analysis. So this is well within my expectations, right? The 786 is a rare target. We're now sitting at 11.6 trillion. And I think the 1-for-1 extension at 24.5 trillion is just like, that's your moon boy, right? We're not moon boys here. We are moon boys long term, but in terms of short term, within cycle to cycle, we take it level by level. And these are the levels that I'm looking at, man, right? Both the rough napkin math and the Elliott wave ratios reflect anywhere between $4.3 to $6.5 trillion in market cap, total market cap for this bull market. So that's my take on that.
Hey, Jay, not to be a smart ass, but I'm just trying to get something for the audience. When would you define the end of this bull market-ish?
Staying within the 4-year cycle, end of tail end of
Q4, right?
Q4. Yep.
Right.
Tail end of Q3, early Q4.
That's fine. I just wanted to put some timelines around that for the people at home, and just let you guys know we are currently the gold market is currently at 21 trillion world gold market. Just to put that in perspective, other things that are in perspective to that would be close to how many coins and banknotes that are out there. There's around 8 trillion across the major currencies. So it's still a very small market cap. Even if it gets to that level that Jay's pointing out, still very easily to manipulate. So expect more volatility. Crypto's always going to be very volatile. It's finding its footing. It's maturing.
Speaking of gold, that thing has been on a run. We're looking at new all-time highs, $3,132 per ounce. Been been on a tear there.
We said it though. I mean, crypto's only been around for, legitimately crypto's been around for what we'd say we'll just say 10 years for argument's sake, right? Let's just say 10 years. All right, gold's been around how long? It's been through a lot of bear markets, a lot of transition. It's been
just a couple millennia.
It's very proven, and for most people, that's the only thing they know, right? It's the only thing that they know how to hedge against inflation or to flock to it during uncertainties. It's the perfect recipe, perfect environment why gold is doing so well right now.
True. I'll cap us off with some quick napkin math as well. So total crypto market cap topped out at 3.01 trillion for the last cycle. Cycle before that was 761 billion. Difference of the tops there was 294%. Assuming a 294%, which I am not, that would put us about that 8.95 trillion mark. But let's hedge our expectations a little bit. Even if we got 200, that's 6.1 trillion. And then pulling a quick fib, we got my 1.618 at 5.2 trillion. 2.618 at 8.07 trillion, and then the 3.618 at 10 trillion. I'm with Jay. I don't think we're hitting 10 trillion this cycle.
Yeah.
I think that 527 is a reasonable figure, although I mean, it'd be nice if we got to that 8 trillion market cap, but based on everything going on right now, I don't know how I feel about that one. So I think I'm right there with Jay, around that like 6 trillion mark and below.
Yeah, I think if we got the moon math targets of Bitcoin for this 4-year cycle, which is around $250,000, so that's going to be about a 3x in Bitcoin's market cap. So that'll put you roughly around 4.5, close to $5 trillion in market cap for Bitcoin alone. If Bitcoin were to get that 3x from these prices, then you could have a good shot at getting that $8 to $9 trillion possibly. Right? Because we don't know what the trickle-down effects of that kind of run for Bitcoin will have on the rest of altcoin space. And we don't know if Ethereum is going to catch a bid to the same degree, right? Ethereum could possibly catch a bid to the same degree. We don't know. Right now, everything is really all of our analysis is really focused on Bitcoin because that's what's moving significantly right now. And so if it was just Bitcoin and everything else was to stay at status quo, I think you're looking at around $7 trillion, $8 trillion if we get that 3x from Bitcoin. But if Ethereum and the altcoin space were to catch a bid, then you're looking at a potential $10 trillion total market cap for the entire crypto space.
Definitely. All right.
Just
well,
need
before we close
out
out,
of the way. Just need the tariffs out of the way. Just need the Fed to step in and start doing some rate cuts. Maybe come out and define what that crypto reserve currency or reserves are going to be look like and all. Get some of that clarity. I mean, those are kind of the recipes we would need for that nice little run that you guys are talking about.
True. That leads perfectly into our final comment of the night. Twinkie saying conditions to probabilities to outcomes.
Precisely.
That is, seems like a very logical way to approach it, and I think that's what we do here as well. So, by the way, shout out to everybody in the chat tonight. You guys have been absolutely amazing. Thank you so much for all the great input. This has been a fantastic stream. As we go, let's go around the horn one final time, gentlemen. Final thoughts. Jay, what you got?
Everything in the short term is just noise. Buy the dips if you're so inclined. Accumulate more crypto, and don't worry about the short term, man. Right? We trade probabilities. We take it level by level. If we are going to be an extended bear market, fantastic. Just more time to accumulate. Right? More time to get more Bitcoin, Ethereum, whatever floats your boat. Don't get caught in the moon boy narrative, because moon boys generally tend to get caught bag holding and ride the entire cycle down. So moon boy long-term perspective, but if somebody's telling you that Bitcoin is for sure going to $250,000 by the end of this year, level by level.
Well said, sir. And by the way, if you want more chart analysis with our fantastic Agent Jay, go check out the Telegram exclusives over on the DGen Roundtable Telegram. But outside of that, Tracker, what you got?
Words of wisdom. That is, if you're enduring so much pain in crypto and you're losing sleep at night and you can't, it's really beating you up, maybe consider readjusting your portfolio to what you can actually stomach. That's why we were talking about really have a long-term portfolio where it's consisting of those big cryptos. I mean, the big, large market caps that have proven. I would consider, I'm not telling you to go out and buy this, but you have to compare up your own portfolio. But the Bitcoins, the Ethereums, the XRPs, the Solanas, the ones that have been, dubbed by the United States are going to be supported and backed. Be in those heavily, then have another portfolio for your trading and speculative stuff, that where if it all goes to zero in the speculative, you will not lose sleep and you'll be able to live thing. If you're not having good quality of life during this, you got to readjust. Because I mean, ultimately, the one thing that even billionaires that are much older, they can't get life back. So you got to really enjoy life. Okay. So don't let this beat you up. Readjust and figure out what your risk tolerance is. And everyone's is different.
There you go. Final words from Tracker. Risk, not management, but definitely do that. But also risk appetite. How much can you stomach? Alrighty, Dace, what you got, brother?
I think you guys covered it, man. That's quite the sign off. Happy to be here. Thank y'all for having me.
Excellent. Thanks, gentlemen, for joining us tonight, and thank you everyone out in the audience. I know the crypto seas are a little stormy as of right now, but I'm banking on sunny days to come. But outside of that, thank you all for joining us tonight, and we will continue to navigate digital finance all together. Good night, everybody.